Coinbase reported a sixth straight quarterly loss in the latest quarter. The company did beat revenue expectations. Regulatory risks and lower trading volumes continue to weigh on the company. Let's bring in Lisa Ellis for more. MoffettNathanson partner and senior equity analyst. Lisa, it's good to see you here. Coinbase, of course, has been under fire as it has been arguing with U.S. regulators. And then it comes out here, six consecutive quarterly loss, revenue down, but beating estimates. How should investors even be thinking about this company at this juncture?
Yeah, look, you're making an investment in Coinbase over the long term, for sure, right? The business is going to be volatile from quarter to quarter because it's subject to the vagaries of the overall crypto asset volatility and asset movements. But they are, building a company for the long term that is an infrastructure provider for the crypto economy. I mean, some investors will say to me, I'm making a last man standing type of investment in Coinbase, which is one way to think about it, which is that there's a lot of sort of fringe players still in the crypto market. But Coinbase is a player that's always operated within the bounds of regulation, within the bounds of licensing and all of the compliance. And if you do believe over time that this market will mature, will kind of move much more into the mainstream, they're sitting there as, sort of one of the kind of core major players, and really from a stock perspective, the only large cap way to play this space. And we like it for that reason.
Well, and keeping with the regulation talk that you were just mentioning, Gary Gensler, no secret that he has come down heavily on the crypto industry, but it seems like he's backed off a little bit recently. And I go back last year, especially with all the reports and investigations that are now out, it seemed that there was almost an existential threat to Coinbase at one time because Gensler was saying that only Bitcoin is not a security. That could have been a nail, but it looks like things are bouncing back. SEC kind of backing off here. What do you see in the future for the regulatory side of things?
Yeah, and I think, they need clarity. And I know Brian Armstrong at Coinbase says this over and over again. The outcome can be whatever the outcome is, but what we can't do is sit here in limbo, right? And have Gary Gensler saying one thing, having the head of the CFTC saying something else, right? And it sort of leaves the whole industry, including Coinbase, kind of stuck, unable to move forward. But yeah, where there, I think what's happened on the regulatory front in a good way, which is that, they're sort of honing in on the core issues. It's not this sort of like, well, everything's a fraud and everything should be shut down. It's much more narrowed and focused now to where they're really just simply debating different classes of crypto assets and how they should be treated from a regulatory perspective. That becomes a very sort of like objective, there's unemotional thing. You're sort of simply sitting there trying to figure out how you put the right, regulatory guardrails around it. And as you highlighted, the SEC has sort of moved, at least it seems like, to sort of, kind of move in that direction to being at least marginally more constructive, as opposed to just sort of the overarching kind of narrative that all of this stuff should just be shut down, which is good. Yeah. And we're also seeing, from a regulatory perspective, these two critical bills advancing in Congress. Right. They were passed out of subcommittee and will be going to the floor later this year, which is also a really important step for the industry.
So just quickly, though, Lisa, as we look at the issue of tokens, let's put that aside for a moment and talk about the issue of staking. If staking does go away, isn't that a pretty big problem for Coinbase? I mean, they saw revenue from staking rise and they get a decent chunk of revenue from it.
Yeah, it's only about, it's like single digits, 4 or 5% of their net revenues. It's not catastrophic or anything to their business itself. But that said, it is a really important, so their business would be fine, and they're very, very transparent about this. But the reason that they're fighting it so hard, and they assert that the way that they facilitate staking, they're not taking ownership of the assets, for example. They're simply administering the process. You sort of get into a lot of kind of debates about exactly how this is all done. But the reason they're fighting it so hard is because it is, to your point, actually a very important way aspect of how the crypto economy works, right? You need liquidity in the market in order to create that liquidity. It's sort of loosely analogous to like you need people to put their money in banks so that the money is available there to lend out to other people, right? You need that liquidity, and it's sort of an analogous thing in crypto. So it's less about the revenue, more about the functioning of the ecosystem.
I want to move on to a crypto-adjacent company, shall we call it. We're talking about Block, of course, Jack Dorsey's Block, beating estimates on the top and bottom line. It raised its profit forecast for the year, but the stock is taking a hit. It's down about 11%. It looks like there's some disappointment around the July gross profit growth forecast. Lisa, can you talk to us about that? Are you in agreement with what we're seeing in terms of stock reaction today?
Yeah, it seems a bit overdone to me, but no question the print was mixed. Had some really good things, had some things that were a little softer. So yeah, there was probably two things I'd highlight that the market seems to be reacting to. One, as you said, the July numbers, and they gave a pretty explicit outlook for 3Q and 4Q, basically saying that their gross profit, which is their version of net revenue, it's the top line number that you focus on, is decelerated from 27% in 2Q to 21% in July. And they indicated that we should be expecting it will remain closer to that level, like low 20s throughout the rest of the year. The reason is largely simply because they are lapping some unusual dynamics from last year. They had some pricing changes, for example, that gave them some benefits last year. There were some other like interchange changes more broadly in the industry. So kind of discrete events. It's not really affecting what I call like the unit volume, but more like their top line numbers are decelerating. So everyone's had to sort of bring that back half outlook down a little bit. And then the other thing is that underneath the covers in their 2Q results, their Square business, which is the point of sale systems, the little white point of sale systems here in the US, the growth rate there was a little bit slower than folks were hoping for. Volumes were only 12%. Gross profits were up about 15%. And that's the same market where players like Toast compete. Clover, which is owned by Fiserv, and the 2Q numbers out of those other firms were stronger. So it introduces a bit of nervousness that maybe Square is sort of saturating the micro market space that they play in. And, in that space is getting much more competitive, and that maybe they're struggling as they're trying to move up market. That's the other factor that I think folks are reacting a little bit negatively to.
And Lisa, just sticking with Block here, but getting back to crypto, I was surprised at how big Bitcoin revenue has become of the entire pie for the company. $2.39 billion out of $5.53 billion. That's up 34% year over year. So that would seem to be, especially in the face of what we've seen depressed crypto prices, and given everything that's happened in the industry, surprising to me. How about your reaction?
Yeah, it's a weird accounting thing. I'll just point out that Block, the way that they have to treat the way a Bitcoin flows through their system, they actually have to record it as gross revenue on the income statement. So it sort of optically always looks like, oh my gosh, you really just net it out. So it's only really on a net basis, a couple percent, but it has increased to your point. And that is a reflection, of Cash App. Their digital bank, which is the competitor to something like a Venmo or a PayPal, has just been an unbelievable success for Block. 54 million monthly active users here in the United States. 2/3 of them use the app weekly. It's become, the 20 million users there are using it truly as a digital bank, meaning they've got a debit card, they're doing direct deposit. It's sort of quietly emerged post-pandemic as by far the leading digital bank in the United States. And it's those users that are the ones that buy and sell crypto, buy and sell Bitcoin and some other assets. So it's that growth that you highlighted is reflecting the extraordinary growth that Cash App has had over these last couple of years.
So then the other question is, Lisa, if it does have that status, are there any signs of the same issues that PayPal talked about earlier in the week? That is more, I don't know if Block does provisioning in the same way, right? But PayPal effectively signaling credit deteriorations are are worsening. It is tightening its standards. The same kinds of trends we're seeing in a lot of the banks. How is that, if at all, filtering through to something like Block?
That's a really good question, because you're right. They do have very similar businesses. Both PayPal and Block have a couple of different forms of credit products. They both have a form of banking license, one way or another, and they do offer directly lend, mostly to their small businesses, and then they do a little bit of the like in PayPal's case, like the buy now pay later style short-term consumer financing as well. And PayPal, as you highlighted, they're seeing this discrete weakness in their small business lending business. They've had to tighten down credit standards there because they've saw an unusual, unexpected bump in charge-offs, write-offs in small business lending, suggesting maybe that we're seeing a little bit of creeping in of some softness in the small business land. And this is really small businesses. You're talking, less, single location, usually like kind of a mom and pop shop. And I would just connect the dots there because, as I was highlighting, part of the reason Block stock is down today is because their point of sale systems were weak. That's exactly the same type of business. They lend through that business, and they provide kind of payments and lending and other banking products to these kind of micro businesses in the U.S. Interestingly, you roll back the clock 2 weeks ago, we saw American Express report, and then we also saw in Visa's numbers, both of them actually also flagged weakness in the micro market. So, we've been one all, for the last 12 months kind of saying like soft landing. We're really not seeing a lot of signs of deterioration in the spending-based economy that payments is tied to. But just in these last couple of prints, we've started to see what looks like a little bit of a pocket of weakness down at the very low end of the business world, like down in the micro space.
So we'll call that maybe flashing yellow here. Really interesting. And thank you for connecting all those dots with us. Lisa Ellis, MoffettNathanson, partner and senior equity analyst.